Well, for more insight into U.S.-China trade talks, let's bring in Terry Haines. Terry is the Managing Director and Head of U.S. Policy and Political Analysis at Evercore ISI. Thank you for joining us.
My pleasure. Thanks for having me.
So as we look at how the talks developed, what would you say is the most significant outcome in these discussions?
Well, Rachelle, the most significant outcome in these discussions is the fact that they've happened. And that, in my view, is that they're another step on a fairly long road. We had a Chinese delegation here in Washington a month and a half, 2 months ago. There have been a lot of informal discussions between here and there. And now you've had the extraordinary and I think welcome spectacle of a very high-level United States delegation going to Beijing with the idea that they begin negotiations in earnest. And so I think those are all very good things.
Now, given some of the ramping up that we saw before the meeting, expectations were pretty tempered before the talks began. And it's interesting, one of the factors was that people were wondering about the U.S. delegation having such a divided stance, some being very pro-free trade and others really being more hawkish on China. So why do you think the dialogue is so important, given the fact that there was really a likelihood of a lack of consensus?
I think there's more consensus among United States advisors to the president that is commonly understood. They are united, as the United States departing statement said today, on one very important fact, that they need to reset the China-United States trade relationship, and they're looking earnestly to do that and to advise the president on how to do that.
Now, as we await the rest of the demands from the Chinese side, let's also look at the demands from the U.S. side and the likelihood of those demands being met. What's your take on that?
My take on that fundamentally is there are two kinds of issues here that have really spurred the dialogue. One is American concern about Chinese treatment of intellectual property, and the other is American concern about technology transfer. And my view of this generally, and we've written a lot about this, is that I think the United States and China can work out something on IP protections. I think that, and I think the Americans understand this, that the idea that going after tech transfer is much more fundamental to the Chinese economy, to the China 2025 program, and I think the American government probably considers that much less likely to happen.
Now, China, though, has already said that these forced technology transfers are illegal. So is it a case of it being a disconnect more so than a lack of consensus?
I think the idea here is that there's a concern that the going-in price for American companies in China, in fact, is tech transfer, and the American government, whether it's this administration or the last one, have been consistent about saying that they believe that linkage should not happen.
Now, let's also look at the $200 billion reduction in the U.S.-China trade deficit that the Trump administration is seeking by 2020. Now, how realistic is that, especially given that the U.S. includes these intermediate goods, which include other countries, when it's making this deficit calculation?
One thing that we have looked at, and we have a dedicated China research team that has been responsible for this work, is the likelihood that you could the United States and China could actually agree on this. And what we've found is certainly there could be adjustments in U.S.-China trade by at least $100 billion, probably over 3 years. So I'm not real surprised that the United States going in position is something on the order of $200 billion over 3 years.
Now, given the fact that U.S. consumers do still buy a lot of Chinese goods, does that make it more difficult then to be able to cut that trade deficit?
We think there are areas in which the United States and China could agree, and without disturbing the fundamental nature of the relationship, and we would look for some sort of accommodation along those lines eventually.
So, given the uncertainties that we're seeing playing out, how do you see that affecting the investment decisions that businesses and companies are trying to make when you have the world's two biggest economies at this trade standoff?
Fundamentally, I think what certainly United States businesses understand, and to some extent world businesses understand, is that there's a lose-lose proposition should trade disputes escalate between the United States and China. Neither country wants that. Both are trying to seek some kind of an accommodation, and we're at the beginning of a process where ultimately I think it's likelier than not that that accommodation will happen. But there will be some impact in the short and medium terms on investment of all kinds as the uncertainty in the business climate rises.
And what sort of economic impact could we be looking at in terms of industries?
Oh, well, it depends entirely on the industry, but I think there are, lots of concerns in the United States in the agricultural sector, for example, about the effects of potential Chinese tariffs, and there are concerns on the Chinese side about semiconductors, just to name two possible areas.
Now, if China and the US were to work out these differences and get their trade ties back on track, are we likely to see any advancements on their bilateral investment treaty talks, which, as we know, have already stalled in the past?
I think that will be a priority for the United States once these core disputes over intellectual property and, to some extent, steel and aluminum, which have a lot more to do with the United States national security than anything else, get resolved. The administration has said that it is a priority to do that, but that these trade talks take priority over the bilaterals.
All right, we'll have to see how this all plays out. Thank you so much. Terry Haines of Evercore ISI.